Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the market was in a more of a cheerful mood after a stronger than expected US jobs report suggests a recession may not be as close as investors had feared. Following the job announcement, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded and refreshed its 2-month peak around 104. Having been a tense week of negotiations on Capitol Hill, the US Senate gave the final approval and passed the bill to the House of Representatives with a vote of 314 out of 117. This has cleared the Senate of the votes after a late Thursday announcement came through of 63 to 36. It now goes to President Joe Biden to be signed into law. Meanwhile, on Friday, the US Labor Department continued to surprise global markets as it still runs red hot. Therefore, it may complicate the June US Federal Reserve's rate decision meeting. Investors are deciding whether now we will get a hike in June or the following month, after the US non-farm payrolls data for May added close to 80% more jobs than forecast of 193,000. After the Bureau of Labor Statistics showed that employers added 339,000 jobs in May, while the unemployment jumped from 3.4 to 3.7. So therefore, looking to the Australian dollar, all eyes now look towards the RBA rate decision, which will be announced on Tuesday afternoon at 2:30. It is anticipated that the RBA may keep rates on hold. However, they did surprise the market last month and hiked rates 25 basis points to 3.85%. Another hike would see the market go to 4.10%. Looking at the technical levels, we can see the market is rallied and now a little bit hesitant as it gets close to the 60-day moving average, which is seen around 66.60 to around 66.85. I feel that the slight hesitation and also a little bit of a tired look when it comes to the technicals that still a little bit lackluster, could see a pullback and therefore look towards 65.45 or down to 64.85 and reassess. The euro, well, the market took a sharp reversal after tackling the top side level around 107.8085 and the dollar rebounding has put pressure back on the downside, and buckling the RSI now looks back towards the region of 105.85 as a potential target. If the technicals, as I say, are heavy, I feel little upside take will emerge and therefore remain on the downside. And with the dollar strengthening, we finally snapped the 4-day bear sentiment and now looks towards 141.42 as the broader objective still looks, as I feel from a weekly outlook, relatively strong, and therefore could see this climb and eventually reach its target and reassess from 141 to 142. With any pullback, I expect to be limited, with the base holding somewhere around 139.1015 to around 139.5. Sterling also snapped its bullish bias and now back on track to see further weakness for this week, which could see a slide towards 122.80.95 after the strong demand. Profit taking will likely accelerate. Finishing up with gold and oil, well, gold plummeted around 1% and now posting engulfing candle that waits confirmation. A break of 1,942 would be the confirmation back to re-challenge the lows around 1,928.33 with an extension in play down towards 1,912.14. Any upside take should be limited due to the heavy technicals. And along with the oil, the market gapped open this morning, ran straight into that 74 resistance and backed away sharply. And with the gap nearly filled, could see demand emerge again after Saudi Energy Minister told news conference that the country's output would drop to 9 million barrels per day in July from 10 million barrels in May. Along with this, he added that this is a Saudi lollipop. We wanted to ice the cake. We also want to add suspense. We don't want people to try to predict what we do. Interesting words, but nevertheless, the market was a little bit on the jitter side and demand crept in strong this morning, but profit taking also returned. Let's see if this gap does get filled and rebounds, and therefore from $72, look back to $74 a barrel and reassess. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.